Hello, everyone. Welcome to the Index podcast, where we come together every couple of weeks to discuss on-chain data, chart crimes, and metrics that move the crypto industry. Today, with me, Hildobby, resident data house of Dragonfly.
Hello, everyone.
Dylan, Prince of DePIN at Messari.
How's it going, everyone?
And I am Boxer, and I am the community powers at Dune. Before we start, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice. We are acting independently of our respective professional roles. And with that, welcome, Dylan. Very good to have you. And maybe just to get this started, I don't think a lot of our listeners will be familiar with you. So if you could just give us the kind of like standard 1 minute pitch of who you are, how you got here, that would be wonderful.
Yeah, so thanks for having me on, guys. I'm a senior enterprise research analyst at Messari. So we cover a bit of everything at Messari. I'm kind of a DePIN specialist, but also a generalist. So, I do DeFi, stable coins, prediction markets, basically just try to identify anything new, emerging trends, new valuations, find alpha, so to speak, for our clients. I've been at Messari for about a year and a half, in the crypto industry for 4 or so years now. Mostly research, investing roles, and some crypto startup experience and tokenization. I've been very deep in DePIN since I joined Messari. Messari coined the term DePIN. We've been probably the earliest to cover the space in comprehensive depth. And we we continue covering it no matter what the market conditions are.
Nice. I was this came to be from I was having lunch with a friend, and he told me if you want to talk anything deep in, you should reach out to Dylan and get him on your podcast. This is where we are. And honestly, DePIN is not necessarily the sector we're the most familiar with. We all work in crypto, all three of us, including Danning, who couldn't make it this time, but is with us in our hearts. It's not the most familiar sector, but we kind of wanted to use this episode as a kind of recap of, first of all, reminder of like what DePIN englobes, what it encompass, and as well as what is the state of the sector currently. And I heard, you said you were currently working on a report on DePIN, kind of state of DePIN for 2025. You seem like the best person to ask. So what is DePIN, if you could kind of concisely put that into a few words?
Yeah, for sure. So DePIN, decentralized physical infrastructure network. The idea is basically to use token incentives to crowdsource a network of infrastructure at a very high level. So what that means is, let's say you want to create a decentralized wireless network. So like Helium, for example. What you do is you launch a token, and you reward people who deploy mobile hotspots. So just think like, a $300 to $500 device at a location they have access to. And when people use that hotspot, when they use the network, people who have deployed those hotspots are rewarded with tokens. And the idea is basically that you can deploy a network faster and more efficiently, compared to if you're just like a normal startup or company is trying to deploy infrastructure as fast as possible, because you're offloading the capex and the opex and maintenance to a network, a crowdsourced network. You have access to real estate that you don't actually need to pay for, because people are using real estate they already own or have access to. And you basically can take advantage of crypto's token incentives, as well as its infrastructure, its payment rails, in that you're able to access anywhere globally. So like, instead of figuring out how do I do payments in LATAM and in the US and Asia, and how am I going to work with the banks and all that, you just pay it right to their crypto wallet. So all this together enables infrastructure networks that can deploy faster and potentially more efficiently from the perspective of the entity that's launching the DePIN.
Okay, yeah, I think that makes sense. I think the way I sort of put it simply is the flywheel kind of makes sense, where essentially it's like you give rewards to network participants, those, here, let's say, having a hotspot. Then the network, as a byproduct, get hopefully more usage, and it generates more revenue, and that incentivized to, it's like a circle flywheel where, the more hotspots, the better the network, the more revenue, and therefore the more the hosts get rewarded. So it's like it does make a lot of sense. And there's a lot of different physical infrastructure network and different types. The ones I was looking into and saw is like there's computation network, storage network, connectivity networks, there's smart contract platforms, and there's all kinds of things that, depending on your definition, may or may not fit within that category. But I'd say it's fairly broad and open-ended currently. Maybe we can go down and like see some of the more notable projects that do take part in DePIN. What would be the first few that come top of mind for you?
Yeah, I guess we can just start off on categorization. So the way Messari thinks about it is physical resource networks and then digital resource networks. So a physical resource network is something that tends to produce what we call like a real world resource, which could be energy, it could be connectivity, it could be geospatial collection that you can then aggregate into a data set. This tends to be more dependent on real estate location. So like you can't like deploy, a million nodes within a single square mile because you have diminishing marginal returns for the data collected or the service you're providing. And then on the other side, we have digital resource networks. So think compute from GPUs or file storage or a content delivery network. And these are more digital native assets or resources, less dependent on geography. You can kind of scale your production of this asset in a very concentrated location. And there's usually less verification issues. Like it's easier to verify that compute was produced and, supplied to someone than it is that energy was produced in the real world in a decentralized, trustless, permissionless way. So that's how we categorize it. Within those categories, I'd say the largest DePINs, if we go by revenue and just usage, is likely Helium, which is the connectivity DePIN I mentioned earlier. So they have just over 2 million users connecting to the network on a daily basis. They both have a carrier offload program, which means that the largest telecom companies like AT&T and T-Mobile connect to the Helium hotspot network when they don't have coverage in an area, or they have subpar coverage. And then Helium also operates its own mobile service, so we call them mobile virtual network operator, where they basically offer a zero, I think $20 or $15 and then $30 a month plan. So like some of the cheapest phone plans on the market to subscribers, and that leverages the Helium network as much as possible, and then conversely falls back to like T-Mobile when they don't have coverage. So that's the biggest DePIN. Does about 21 million in annualized revenue now for the HNT token holders across both the carrier offload and the Helium mobile plans. So other DePINs, I think we can look at the compute space. There are like dozens have spun out in the last couple years. So networks like IO.net, Aether, some older ones like Akash, Render. These basically, they either operate as sort of marketplace where you're connecting latent, underutilized GPUs to a downstream user, or it could be more enterprise focused. There's all kinds of nuances here, but the idea is basically just incentivize people to contribute their unused GPU capacity. And in theory, you can reduce prices in that manner. And then there's all sorts of other DePINs. There's Hive Mapper. They're basically a mapping DePIN where they go around. You put a camera on your car, and then it goes around, and it just takes imagery, pictures, and collection of video and other images all around the world, and that basically is like a Google Maps alternative. So it updates more frequently. You don't need to have a dedicated Google Maps car, and you can sell that data. Now that's also being used more for AI use cases as training models and increasing situational awareness. And then I guess I'll finish off with GeoNet. They're what we call an RTK network. So think like you have a satellite space, you're doing GPS location services. An RTK network basically corrects the error that the GNSS station in space has to within a couple centimeters. So it's just like located on the ground, and it creates exact location. And this network's basically comprehensive on the West now. In just 2 years, it's created the largest RTK network. It's like 20K nodes. You only need one for like 5 square miles. And it's probably doing close to 10 million, or I think around 5.6 million in revenue, but soon to be over 10. So it's growing very fast. So I'm kind of just outlining the broad range of DePINs. There's hundreds at this point, and they cover everything from energy to, like I said, connectivity, camera sensors. There's now like data collection to train physical AI and robots. There's all kinds of different networks. But that's a high level overview.
For reference, because I don't know, I recently learned more into it, but like RTK network, for those listening, the way it works is essentially we all have like GPS on our phones, which are fairly good, but not like pinpoint accurate. And for many use cases, you need pinpoint accuracy. I think one of the easiest one to explain is probably like agriculture, where if you want to automate, essentially crop maintenance or whatever you want to call it, I don't know, but like spread out seeds perfectly and stuff like this, you need very, very accurate position data, and that is what the RTK system will do, which is essentially use triangulation from GPS network and then correct it off with maybe some drones or similar tech that allows for super precise location data. So yeah, and the others I think you mentioned, so compute with stuff like IONET, render. I think this is interesting. I think there's I saw that, what is it, currently those are like about 60 million in total historical revenue in that like computation kind of category. That's what I saw from another report. But yeah, I don't know, I heard about render a while ago, and I thought it was a very interesting project. And you also have, I'm curious about your takes on, would you put like Tensor in the DePIN category? How would you categorize like blockchain level platform? How would you, what do you think here?
You mean BitTensor or like
Sorry, BitTensor I meant, yeah.
Okay. Yeah, I think we have BitTensor on our DePIN market map in Messari. I think the whole DePIN categorization question is a bit complicated. It's actually led to a lot of controversy. So like you could say that Bitcoin was the original DePIN, right? So it's a bunch of Bitcoin miners. Actually, this is the example that a lot of people use for why DePIN should make sense theoretically, and that Bitcoin was the fastest deployment of infrastructure in history. So, no centralized coordination, and billions of dollars worth of miners deployed all over the world just based on game theory and token incentives. So you could say Bitcoin's potentially a DePIN. I'd say how I think about it is more like the spirit of DePIN. I think the idea is like you're creating real world utility. So like if you're just a blockchain and you happen to have nodes and validators that is physical infrastructure, I wouldn't say like the spirit of that's to create real world utility. It's to be a blockchain and enable decentralized ledger. So I tend to exclude anything that's not like purposefully trying to create a non-crypto native use case. So BitTensor kind of falls in an in-between area. Like I think you can definitely say that it is coordinating physical infrastructure. It is, enabling, training and inference and all sorts of activities within AI. So I think you can say it's a DePIN, but you can also say, it's more focused on crypto native AI or whatever. So I think like it's fine to call it a DePIN. it's fine not to call it. And I'd say it's not like a pure DePIN. So like it's not within like what I focus on the most in my research.
Okay. And I have another last question on like this categorization aspect. When I really got into crypto in like 2018, 2019, I remember prior to that there was like IOTA as like Internet of Things network. I never really fully understood the full concept, and I have no idea where it's at today. How do you think about those? Because Internet of Things is deep in a way. If it's like it is physical infrastructure, is that like a dead category? Is that even, I don't know how. What is the state of this kind of aspect of things?
Yeah, I think actually going back to Helium would be an interesting example. So Helium started out as an IoT network, and that's kind of
Yeah.
what it was known for. Like it reached its peak market cap in 2021 as an IoT network. And the IoT
Okay.
network is actually still larger than the mobile network. The problem is
Oh.
monetization, and that Helium just like if you compare, so the IoT network still exists on Helium, but it generates about 1 to 2% of the revenue that Helium Mobile does. So IoT is just very difficult to monetize. You need a massive, massive network that on a unit economics basis becomes kind of non-practical or just not economically viable when you don't
Mhm.
have a pumping token. So it really does come down to that. That said,
Yeah.
it works. Like there are IoT networks that are DePINs. I think we just haven't found enough valuable use cases yet, where it makes sense that you can like pay miners sufficiently to get sufficient value out. It's an input in, output out kind of problem. So yeah, I think IoT still exists, but it just hasn't proven to be that attractive of a value creation use case.
Okay. But hopefully one day we'll find like critical mass, uh, and there's enough, I guess, demand for that network to make sense. We're just yet to see where.
Yeah,
Okay.
I think it's
Cool.
more of a scaling problem. Yeah.
Yeah. Okay. Very cool. Another category I'm gonna touch later on, I guess, is you talked about storage networks. The more notable ones I had in mind are gonna be like Filecoin, Arweave, Sia. What I was looking at, I saw that Filecoin can host like 4,000 petabytes, Arweave 115 petabytes, Sia 8 petabytes. Those are numbers that I don't really conceptualize in my head. They're like, such high magnitude that I don't really have for scale. Like, is that sufficient for what we need them for? What do we use them for? Do you have much information there on like how these are used and maybe the future looking kind of aspect of the storage networks, decentralized storage networks?
Yeah, so I think, Filecoin's been around for a long time. I think it launched in like 2014, so it's one of the oldest blockchains. Um, and it started not being called DePIN as a peer-to-peer, basically storage network. Is how people thought about it. I think so. Storage still exists. It's growing and has a lot of potential. The issue that it ran into was that when you actually go to developers and people who want to access storage, they're not just looking for storage itself. They're looking for a more integrated service. So like they like AWS because they trust it, and there's all kinds of tooling and connections to other parts of their stack. So they kind of struggle to create again a business that makes sense on a unit economics basis. Um, that said, it's still growing. Like they've done a lot to make it appealing to enterprises. They launched Filecoin Plus. They have all these. They launched a file. I think it's the File VM. So like all these are designed to be more appealing to like developers and expand beyond these more crypto native use cases where people are looking for decentralized storage for basically blockchain data. So like Filecoin is like I think 1.8 million in revenue on an annualized basis. They were a $1 to $5 billion market cap. So obviously very out of line with the revenue, where the value they're creating for token holders. But yeah, I think like these networks are growing. It's just slow. I think like there's not a huge value add from just like a utility perspective in having decentralization. So, a lot of it's just like slowly, making it a service that's on par with some of these larger providers. And that's just going to take time, but it is a massive, massive market. And, I think slowly they'll be able to capture that, but it's not a high growth segment.
Okay, makes sense. And if we look, let's zoom out, I guess, and look at DePIN as an overall category. I don't know if you mentioned this, but maybe you can go back and like annualize revenue and those kind of, even to give an idea of like ballpark numbers, where we're standing right now.
Yeah. So on an annualized basis, we're going to probably close out 2025 at 55 to 60 million in annualized revenue. It's actually kind of hard to say where we started, just because DePIN as a whole has debated a lot over what should count as revenue. Should
Yeah.
off-chain figures being reported by protocols be included in that sum? Within on-chain figures, what is real value accruing revenue? What is potentially self-dealing or spoofed revenue, which is not just a problem in DePIN, probably much larger in DeFi. Um, so like there's been a lot of debate, and there are a handful of protocols that really were driving the majority of revenue. So like I think it looked a lot larger at the start of 2025, and then those protocols refined what they meant by revenue and what was actually put on chain, and we had to revise that. So it's hard to say how much growth there has been, but I think in terms of authentic value accruing revenue that's going to token holders, or represents revenue that could go to token holders if they didn't reinvest it in growth, since a lot of these are just
Mm-hmm.
early stage startups that probably shouldn't be buying back a token yet if they're doing 2 million in revenue.
Yeah.
I think we've seen growth, like pretty significant growth. So like GeoNet's gone from like 2 million to close to 6 million. So that's like a 3x in revenue. Hive Mapper's gone from like 500K, I think close to 2 million or 2 million plus. Helium's gone from less than 10 million to 21 million. So like we're seeing pretty substantive growth over the year. And my personal view, if you go through all the nuances and really find what's real revenue, I think it's grown. Um, and I think looking until next year, that's where we'll see even larger multiple expansions. Like so, in our theses and Messari, I predicted at least 2x to 100 million in on-chain verifiable revenue. I could see that
Mm-hmm.
going to 150 million plus. We've also have some new TGEs that are already large businesses that are going to come onto the market. So yeah, I think it's like, just to clarify and summarize, it's complex and nuanced and pretty opaque, to be honest, what really is DePIN revenue and what should count, but it is growing in a meaningful way. And like while the numbers seem like they're going down and up and no one really knows what's happening, like I think we're seeing a long-term positive trend.
Okay. Yeah. No, that makes sense. I think it's across every category that analysts kind of struggle to see. Okay, what does a name encompass? Does like all these projects? Which of these are actually? I don't know. I don't know. There's all kinds of kind of sectors that I worked on, and it's essentially the tagging issue is like probably the hardest because it's not a definitive factual thing, but more of a where does your definition actually hold? Like where does it stop? And I guess as the data provider here, it is it is your job, just like it's mine in other categories, to like properly define and say, okay, this is why we think this one is part of it, this one is not. This is where our definition end. Maybe there's some in the gray area kind of things. But yeah, it's always an interesting problem as an analyst, and it's always up for some discourse afterwards when you publish those, because obviously not everyone agrees on everything. So yeah, interesting stuff that I guess typical analysts usually goes through and tries to fight for his own definition of things. But yeah, what would you, if we looked ahead in the future, would you say there's major bottlenecks that are preventing DePIN from further growing? And if there are, which would you say are those bottlenecks?
Yeah, so I think within DePIN, it's hard to generalize because, like I said,
Yeah,
it's hard to compare energy
yeah,
to connectivity to compute and so forth. Where DePIN struggled historically is very interestingly not on the supply side, so getting the nodes and getting the resources and actually having something to sell. It's an actually just tapping into the demand side and generating revenue. So like we kind of saw that with my Filecoin explanation. Like there's a bunch of file storage, there's petabytes available, but like people are not buying it because they're looking for more than just pure storage. Um,
yeah,
so like a big constraint across DePINs has just been how do we grow? We bootstrap the supply side. We might need a minimum level of supply to validate that people will even buy it, but we have too much supply and like now it's out of balance and now we're paying out token incentives to miners and in 6 months they're going to start dumping and then it's going to create a cascade where the token flywheel goes in the opposite direction and the network might even have to shut down at a certain point if token incentives and tokenomics weren't well designed. So I
yeah,
think the big bottleneck is really just timing the development of your network efficiently. So, validate demand with a minimum level of tokens emitted, or maybe just using a points program. Start doing a lot of DePIN revenue depends on B2B sales, which can be like a 12 to 18 month sales cycle. So like, get those deals closed before you're emitting tokens for supply that's not needed yet. So
yeah,
like being intentional on like just timing everything correctly, which is a very difficult task,
mm-hmm.
but something that's essential. And then I think other areas there is a value accrual. So a lot of people are like, all right, like you're generating revenue, like we want to see that it's real. Like let's do a buyback and burn. I I think tons of controversy there. So like why should like a new protocol that's doing less than 20 million in revenue even think about redistributing value, and they can reinvest that in marketing and sales and operations, expand the network faster. um, so like maybe potentially posting revenue on chain in some capacity and then using that revenue to reinvest it basically, whether it's an on-chain capacity or off-chain. So just like proving your revenue so that there's market confidence and that your business is growing, but also like not buying back the token and then it goes down and like then goes up and wipes out basically all the value from the buyback. So just being intentional about how you think about value accrual decisions.
yeah,
Um, and then I think there are so many like little problems across every DPIN that it's hard to generalize, but
yeah, yeah, of
it's
course.
really just grow revenue and design sustainable tokenomics. I think that's the biggest thing for DPIN as a whole.
All right.
That sounds like sound advice for every company. Just grow your revenue and just like make sure your shareholders are okay with it. Maybe on the revenue part, you just mentioned that there's a big B2B component. And I think something that maybe we haven't touched on yet is that like I think kind of uniquely, DePIN actually interfaces with kind of like the traditional business markets a lot more than any other crypto company, where like we like DePIN just seems to serve like normal people and not just crypto people in kind of like this circular fashion. So maybe Dylan, if you have a few good examples of like maybe DePIN's working together with I don't know, TradFi company sounds wrong, but maybe just some kind of like showcase things that you just think are interesting of like I don't know, I read earlier that like what was it? Hivemapper, like TomTom actually buys data from Hivemapper, which I thought was like really interesting. TomTom is like I think the leading like they were like a big navigation software. Like my mom and dad used to drive around with TomToms when I was a little kid. Of course, that's no longer the thing today because everyone just has smartphones. But I think uniquely, truck drivers still use TomTom as their preferred kind of navigation method, just because like it knows like the bridge heights and like whatever jazz like truck drivers specifically need. But maybe if you have like more of those like insights, then I'd be super keen to hear some of them.
Yeah. Yeah, I mean, we could start with Hive Mapper. So, like Lyft, for example, also buys data from them. Um, and there's a bunch of AI companies that haven't been disclosed that are starting to buy that data as well. We could go to GeoNet. They have the U.S. Department of Agriculture. They have, defense tech companies starting to hit them up, robotics companies. I think they haven't revealed all the names yet, so I won't say. You have Helium, like I mentioned, so like T-Mobile's using the network, AT&T is using the network. They're expanding to Mexico, where Movistar plans to have 2 million people using Helium. They just announced another expansion to Brazil, where Mambo, which is one of the largest mobile providers there, is going to use Helium. Um, and then, across the board, really, like if we look at content delivery networks. I've heard that, like Amazon and other of these very large streaming platforms, so think like potentially like Netflix, are starting to use some of these CDN platforms in regional capacities where they don't have great latency or just bad, access to the internet. Yeah, I mean, those are a few larger examples. I think if we're looking at energy pretty closely, so we have Fuse that just announced another massive round of like 70 million raise yesterday for their Series B, and they're doing 400 million ARR as like a end-to-end energy producer and retailer in the UK, and they're building a DePIN to basically incentivize people to contribute their energy to their what we call a virtual power plant, which lets them optimize energy usage and then sell it back to the grid. And within other DePINs, there's a lot of interfacing of energy companies, probably less well-known ones, but large companies behind the scenes. So yeah, I think like tons of like Web2 partnerships. I think the robotics stuff is interesting. So I think like even Mag7 Labs are starting to be sold DePIN derived data, whether it's from cameras or sensors, that's going to be used to train physical AI models. So yeah, I think like a lot of the philosophy of DePIN is abstract the crypto away and like produce a product that's just valuable, and like the token incentives don't matter to the end buyer. They don't even need to know about it. So yeah, like I think tons of real world utility in large scale partnerships.
Very cool. One, we tend to be more like on-chain analysts. That's usually where we specialize. And I was curious, in terms of infrastructure, how do these currently work? What I have like top of mind is that Helium is notably on Solana, and it's one of the cool showcases of Solana's throughput and capabilities. Was it impossible before to like have networks of that scale without Solana? And was Solana a big unlock? And is it like high enough throughput for most current DePIN applications, or are we kind of waiting for some technical level advancement, whether it's throughput, block space, TPS, whatever you want to call it? Is there any bottleneck in that aspect?
Yeah, that's a great question. So if you look back to 2023, we saw a lot of DePINs migrating to Solana.
Yeah.
I think Helium had its own blockchain, but others like Render and Hive Mapper, I think, were on Polygon. GeoNet is, I think, still semi on Polygon. So like a lot of DePINs started there, migrated over. Question is why? I don't think it was really fully a throughput question or just performance. I think a lot of it is just like the Solana, ecosystem team and development team and partnerships team was very accommodating to DePINs. And as, volumes increased in Solana, both for just meme coin trading and overall just becoming more retail focused. It seemed like a good place to be as a DePIN ecosystem wise, and captured a little mind share from that just by being a Solana protocol, and maybe even capture a little valuation premium by being on a popular chain. I would say there isn't really a performance bottleneck right now, so I don't think any DePIN is like facing any issues in terms of like transactions per second that they need, or the cost per transaction. I think all that's pretty negligible in their eyes. That said, if these DePINs can really scale and become multi-billion-dollar protocols in real-world businesses, like there could be more demand for block space, but I don't think we're anywhere near that. Like DePIN is not accounting for even a small percentage of actual on-chain throughput or usage compared to any meaningful DeFi application. So I think the bottleneck's just not there yet. And a lot of people ask me like, what chain should I build on? Or chains will be like, hey, like, how do we get more DePINs? We're the fastest chain. And I'll say they don't really need to be the fastest chain. They want access to users. They want support. They want introductions to business enterprises. Like, I think that's why Base, for example, has been able to attract a lot of DePINs. It's just they have a large network and institutional credibility. So these are more business problems and technical problems. But down the road, we hope that becomes a technical problem, because that means these DePINs have really started to scale.
Yeah. Okay, that makes sense. So, I guess blockchain tech is not a bottleneck essentially, at the moment at least. Okay, very interesting. But if you had to like put a short list of like most popular chains for DePIN, I guess Solana and Base are probably top two, with I would say Solana at the top. It's all of course a bit fuzzy in terms of, like you said, all depends on your exact definition of DePIN and like all kinds of things. But if you had like to put a broad idea, Solana is the place for DePIN currently, with Base following up. Is that correct?
Yeah, I'd say Solana is by far the leader. And then Base is there too. I'd say the protocols are a bit earlier stage or don't have a token yet, so it's probably a bit underrated in terms of actual DePIN adoption. After that, there really isn't a lot going on any chain for DePIN. So it really just is Solana and Base. Like there are some DePIN specific chains, Peak, IoTex, that have usage. Probably much smaller protocols for the most part. So I wouldn't really say you could put them in the same league, but yeah, I think it's really those four. It's just Solana based and like some smaller DePIN chains.
Okay, makes sense. All right. There's another point you mentioned before, which is prior to this podcast, is the discrepancy between Helium's revenue growth and its valuation. Maybe you can touch a bit on that.
Yeah, so Helium's an interesting chain, or HNT, that their tokens out very interesting historically. So it was at like $55, which is like I think a 5 billion plus market cap, maybe even 10 billion in 2021. And that was just based on not a lot of majors, like, oh, IoT, this could be cool, like, just the 2020, 2021 bull market. And it wasn't tied at all to actual usage or revenue. Now, since then, there's been tons of changes to Helium. So like they went to a sub-network model where they had multiple tokens for IoT and mobile and HNT, and it was complex. They launched Helium Mobile in 2023. They then phase out the sub-network token, and now they just have HNT. They just introduced buybacks for HNT of Helium Mobile revenue. So I think the market as a whole doesn't really know what the state of Helium is, and that's pretty evident if I post about it and people ask questions that are a year plus out of date. So what I think is happening is now H&T is at like a 350 to 400 million market cap, but it's doing 21 million plus in revenue and is 2 to 3x revenue this year. So the token is down 80% year over year, and revenue's up 1,000% basically. And the question is like, why does that keep happening? Why is there a greater and greater divergence where token is going down but revenue is going up? And like I said, I think it's just the market doesn't fully realize what's happening, and it's kind of a complex token, and a lot of it's telecom and this complex off-chain ecosystem that most non-crypto people don't even really understand. I think the market doesn't really know what's happening. And I think like a lot of people are starting to think there might be a violent repricing of H&T where like, hey, we're talking about the revenue meta in crypto and we're talking about buybacks and fundamentals are starting to matter. Look at this protocol that's soon to be in the top 10 by revenue for all of crypto, and it's a 300 million token. That's a little weird. Maybe that doesn't happen. I think a lot of analysts are starting to see like if it keeps going down, it really is going to hit the floor, because you can't really have a 5x revenue multiple on 100 million, on 20 million in revenue. At that point, even a TradFi investor's like, this is a bargain. So, it can continue to go down, but I think it's more likely to reverse momentum, especially if revenue growth continues. So if we see 20 million to 40 million in the next 6 months to a year, like I think it starts to become pretty unreasonable where it's trading.
I mean,
It's definitely unusual.
A 15 to 20 multiple revenue multiplier on a high-tech growth startup, like that's not out of the ordinary. So, I mean, it is on the lower end, definitely. But yeah, like seems like the market is currently kind of fairly assessing it, almost, where it's like, okay, like we've like all the hopes and dreams and like all the whatever projections that people had on like, oh, this is going to be the future of whatever IoT and like all of this jazz. It's like, no, like this is a company like everything else, and it's like a 15 to 20 revenue multiple probably makes sense here. And yeah, I actually just like what popped into my mind is like, is there maybe some M&A magic that could happen here, where like some of the big telecom providers could see this as a potential like interesting acquisition target, because like as it falls, like it's almost below 300 at this point. Just checked on CoinGecko, and it's like, I don't know, 300 million is not a lot for T-Mobile, Telecom, or however these companies are called. I feel like their CEOs are earning more in like yearly comp revenue. So yeah, that could be an interesting story.
Yeah, I think briefly. I mean, the thing is, there is Nova Labs, which is the off-chain entity, and they've raised like 400 million. So the acquisition of that would cost a lot more. And H&T's, they've intentionally linked it now in the last few months to Nova Labs' equity in an unofficial capacity and potentially in an official capacity. But yeah, I mean, actually, I think the interesting idea or angle of an acquisition is that we've seen no action letters for DePIN's for 00 and Fuse recently, where the SEC said this is not a security, we're not going to take action. That kind of opens the door to corporations either launching their own DePIN's or acquiring a DePIN network, and then maybe trying to drive internal efficiency upgrades or expand some infrastructure faster. So I could see potential acquisitions starting to open up for something like Helium, but it would probably be for a lot more than 300 million.
So I guess Helium is worth keeping an eye on, if you're into this.
Definitely keep an eye on. Yeah.
Yeah, I think maybe to close this off, I like to look ahead to the future, and I think DePIN, first and foremost, kind of enhances and optimizes current systems of mobile networks, connectivity, sensors, and all this. But through this, also allows for cool future applications that weren't really possible till now. I think we recently touched on like how X402 enables micropayments, which weren't really a thing across the internet, and could have some really cool implications for the future. In terms of DePIN, we're stepping into an age of AI and robots that are becoming more and more prominent. How would you say that this maybe unlocks new possibilities? How do DePIN network unlock new use cases that weren't really possible before?
Yeah. So I think I mentioned a bit on the data collection side, but I think if we look at robotics as a whole, we're seeing it as like an emerging category on chain. So what we're calling decentralized physical AI, where it's not just collecting data to train robots, but actually creating a layer to coordinate robots, like autonomous robots in the real world. So, I think once you have, fleets of drones and self-driving cars and potentially androids and all these other robots, like there is a question of how do they communicate between each other. So like if we have all these different manufacturers and standards, this actually becomes a bit of a problem. So there are new companies like OpenMind, for example, that are creating what I call like a machine coordination network, where they have on-chain identities for machine. They have payments enabled directly on chain. So they did just partnered with Circle, for example, and robots can just basically pay for the charge themselves with USDC, or just if they're handing off an object between each other, or if they're going to go do daycare service for a child within a robotic labor fleet. They'll just do it on chain through payments. So there's a lot of interesting ideas on how do we fully decentralize the robotics stack so that we can better enable coordination, maybe use decentralized compute for inference for the robots, maybe use, there might be a need for like spatial intelligence networks where you need to create like a shared understanding of the world, and we need cameras and sensors everywhere so that robots know where everything is. And all this can be coordinated potentially better or faster on chain. So like instead of all these, third-party big tech companies trying to create a shared standard for all the robots to communicate, we just use an on-chain mechanism. So that could be potentially enabled. Definitely not guaranteed, but I think definitely a very interesting direction. And I think data collection's the more immediate opportunity for training the robots.
This was a really cool conversation. Do you guys have anything you want to touch on last, or any topic? I feel like I got a really good sense of where we're at in the DePIN space. What are the major companies and major protocols, or whatever you want to call it. It doesn't really matter. But yeah, and where we're headed. So I'm excited to, I guess, keep a closer eye on DePIN in 2026 and see where it takes off. And I think there's some really, really cool use cases that I didn't even suspect. I think Hive Mapper is one that Boxer mentioned, and I didn't really know much about, but like the name, definitely, I definitely know the name, and I just didn't know too well what they were doing and how it all played. So it's always cool to find new projects that weren't necessarily on your radar and show a cool new use case for the blockchain space.
100% agree. DePIN's a very interesting space. We'll be putting out the state of DePIN in early January. So that's like a comprehensive overview of where everything is. So definitely check that out if you want a pretty good snapshot of things. And then, I try to cover everything that's big and new or interesting in DePIN. So, look out for anything there.
All right. Fantastic. This was the Index Podcast. Thank you so much for listening. Thank you so much for coming on, Dylan. And we'll catch everyone again in 2 weeks. Thank you. Bye-bye.
Crypto data wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bad chiller, cherry picking liar. We call them out and set chart crown on fire. Index Podcast, Crypto Data Empire.